Move on. A new read from Charles Schwab's Trading Activity Index shows that retail investors expect volatility to increase in July. So let's bring in Charles Schwab's Joe Mazzola to discuss. Welcome, Joe. Good to have you with us. So investors are looking for more volatility in July. It certainly has not, apparently, as you report, affected their appetite for equities. They're still buyers.
That's an important point, and we're going to look at this from two different lenses: the behavioral and the attitudinal. So the Schwab Trading Activity Index report that you're mentioning, that's behavioral. So basically, you saw a lot of buying activity in June. A lot of it was concentrated in some of the AI named or AI themed names that you guys were just mentioning. A lot of it tech heavy. Interestingly enough, though, Tyler, is that when they talk about the volatility, there's concern around some of the valuations in AI moving forward into July. And so what we're hearing from our clients is that they're going to stay long. They're definitely more bullish than bearish, but they're moving a little bit more towards a neutral stance. And I think that makes sense, not just from a valuation standpoint, but just from some of the other activity that we've seen in the market as well, too. Some of that divergence that you guys were mentioning.
But am I right or am I not right that a lot of the money that you're seeing come inbound is still going into names that have AI attached to them?
No, you're absolutely right. And I think that there are some names that still present a little bit of value at that point. But I also think it's important. One of the things that we've been talking about with investors is, if you're going to look at some of those names, what could be maybe an exit strategy or a different way to maybe augment some of those returns. Some of the things that we've been pointing out is just kind of looking from the options market, something like call skew, looking at some of the skews on some of these names are really, really elevated, meaning just something as simple as a covered call is a way to maybe soften some of that downside should you get a pullback, or use that as a way to reduce some of those shares if they continue to rally through earnings. I think that's important. And I think tech as a whole, when you're looking at earnings in the next month or so, it's a big driver for the markets.
Tim,
hey, Joe, it's Tim. Thanks for joining us. Yeah, real quick, Joe. I guess my question for you is here we are talking about call skew, et cetera. How about taking out protection on this market? And again, a volatility that to me is risk-adjusted returns. We were talking before you came on about the market and comparisons to 1999, 2000. The reality is that risk-adjusted returns, again, are so much better today than they were back then. But the reality of geopolitics around the world and an election cycle here, that's something I'm hearing from clients. It's something that I think people are starting to feel like it's been a pretty good run. What are you seeing in terms of that interest in taking out protection, or how is it being carried out?
Yeah, I mean, you're still looking at a VIX that is, between 12 and 13. So we haven't seen a big push up in some of that downside hedging. But you have noticed a little bit of a rotation into maybe some of those SPX hedging products just in the last couple of weeks. Just really starting to see maybe some of that activity pick up a little bit. I don't think enough to really move the needle, but it's absolutely something that I think investors should be looking at, given the fact that, we're up 15, 16% already in the S&P 500 this year. And if you kind of look forward on the VIX curve, where are we predicting volatility? Well, we're predicting volatility in October, and that makes sense, kind of given what's happening in the presidential race. Some of that is starting to pull back a little bit. But I would say that it's not just the presidential race. You need to really kind of keep an eye on what's happening in the legislative branches as well, too. And from an investor perspective, if you get levels like this where protection is relatively cheap, it makes sense to take advantage of that.